So going to welcome everyone here today. My name is Sophia Murphy. I'm the Executive Director at the Institute for Agriculture and Trade Policy, IATP. And thank you for joining us today at this Finding the Funding, Federal Conservation and Crop Insurance Policy Takeaways in a Farm Bill Year. So IATP, as many of you perhaps know, was founded in the 1980s during the farm crisis. And we were founded to help support farmers in their fight with government over the direction and purpose of public investment in our food and agriculture. And the way at that time, the global trade ambition, especially of a lot of the transnational food grain companies and food processors, the way their trade agenda was impacting what the government was willing to offer to farmers and to rural communities. Nearly 40 years later, we're still conducting high quality research on the challenges facing farmers and eaters here in the state of Minnesota, nationally, and that's our focus today, of course, with the Farm Bill, and across the globe. We've always had and are proud of our international connections and interest on how farmers are coping elsewhere in the world. We are active members and leaders in a range of coalitions, and we focus our work on the question of how best to get public policy that protects and promotes resilient and economically vibrant food and farm systems. This is going to be IATP's 8th Farm Bill. Personally, my first paper for IATP was on the 1996 Freedom to Farm Bill. And while some of those debates seem evergreen, there are others that are unique to this year's bill. Climate change has already guaranteed that we're firmly in the never seen before territory. Things just ain't like what they used to be. So we're thrilled to have 3 really knowledgeable presenters with us today. My colleague, Michael Happ from IATP, Jesse Womack from the National Sustainable Agriculture Coalition, known to many of us as Izaak, and Kate Hansen of the Izaak Walton League. The presenters are going to discuss some of the needed reforms, what we're hoping to see out of this year's Farm Bill, relating to conservation, to climate, crop insurance, and the provisions that are all of those provisions increasing in importance as climate change becomes more pronounced. And as the US continues to face challenges, including soil erosion, water degradation, and increasingly severe weather events. I want to invite you all to introduce yourself in the chat. Please put your name, organization. The chat is there for that space. If you have questions for the panelists, please use the Q&A distinct feature on the webinar. And we'll do our best. The presentations will take a chunk of time today, but we'll do our best to protect time at the end for some questions. And if we run out of time, we'll do our best to get you answers even after the fact. And there will be a recording of the webinar. We undertake to get that to you within the week. So let me turn to our first speaker. Michael Happ is the Program Associate for Climate and Rural Communities at the Institute for Agriculture and Trade Policy. Through policy advocacy, coalition work, and research, Michael works to ensure that the agriculture sector responds to the climate crisis and mitigates its worst effects. Michael is the author of 6 reports studying enrollment trends of 2 key farmer-focused conservation programs, the Conservation Stewardship Program and the Environmental Quality Incentives Program, or EQIP. Michael worked previously with the National Sustainable Agriculture Coalition, the National Wildlife Federation, and with former Representative Tim Walz. Michael was raised on a farm near Mendota, Illinois, where his family raises row crops and Hereford cattle. Over to you, Michael.
Thanks, Sophia, and really excited to be here with Kate and Jesse and you all. I'm going to share my screen here, but yeah, glad there's just so much interest in conservation, crop insurance, and climate, and the Farm Bill. It's turning out to be a lot more timely of a webinar than we thought when we set this up about a month ago, with section by sections being released by the Senate Ag Committee a couple weeks ago and just on Friday by the U.S. House Agriculture Committee. So again, my name is Michael Happ. I'm the Program Associate for Climate and Rural Communities at the Institute for Agriculture and Trade Policy. And for my part of the webinar today, I'm going to just give a little bit of context about why conservation is important, what the Farm Bill does for conservation on ag lands in America, and then some of the provisions from the recently released frameworks by the Senate and the House that address conservation in the United States, maybe some pros and cons of some of those. And then I'll hand it off to Kate and Jesse to get into more of the weeds, some of the weeds that I haven't reached. So we're going to try and keep this approachable for you all, but yeah, we'll let you know. So this first screen is kind of what I care about in conservation and agriculture today. These are all practices that can be paid for, farmers can get assistance for paying for through the U.S. Department of Agriculture. Things like cover crops, things like fencing for management-intensive rotational grazing, things like silvopastures where livestock are integrated into forest and tree ecosystems, things like alley cropping and shelter belts, trying to make sure that tree crops and row crops are integrated more, and there are windbreaks and places for wildlife. You have things like riparian buffers where there's room for nutrient runoff from fields to get caught, to make sure that our waterways remain clean, and things like high tunnels that can help small-scale producers extend their growing seasons and have some more economic resilience. These are all things that USDA conservation programs can help farmers pay for and can help their bottom line, help build rural resilience and rural communities. So USDA conservation programs can do a lot for farmers. They can help them pay for conservation practices like those that I just showed on the screen, assist with whole farm conservation plans. You can do large-scale regional watershed health, soil health, and reduce greenhouse gas emissions and or sequester carbon. And as Sophia mentioned, some of the conservation programs we've been looking at the closest are the Environmental Quality Incentives Program and the Conservation Stewardship Program. And again, those are programs that help farmers pay for those conservation practices, both at the practice level and at the whole farm level. So I'm going to just share a little bit of context of why we need more funding for both of those programs and other conservation programs at USDA, and then I'm going to talk a little bit about what the Farm Bill does for those programs. So again, the Environmental Quality Incentives Program, I'm going to refer to it as EQIP from now on. That's the kind of program that, if you're here in the Midwest like I am, that can help a farmer plant a grassed waterway, right? Where you're looking out in your field, you see soil erosion, that's where all the water runs. They might need financial help to pay for a grassed waterway or a treed waterway to keep soil in place and to make sure the erosion doesn't keep going away, keep going. It can help plant shelter belts and riparian buffers and things to help clean up the environment. But last year, of all the people who applied to EQIP for this financial assistance, almost 75% were rejected. That's in fiscal year 2023. A little over 34,000 farmers were awarded contracts, but over 100,000 applications were denied. So that just goes to show there's a lot of demand for conservation in the United States right now, and we just don't have the funding, or the funding's not going to the right places to meet the demand that's there, right? This is low-hanging climate fruit, low-hanging soil health fruit. There are a lot of farmers who want to do good by their land, but just need the help to get those practices in place. And looking at the sister program to EQIP, the Conservation Stewardship Program, which really helps farmers do whole farm conservation plans, kind of pair those things like grassed waterways in with other practices to help benefit wildlife, to help benefit soil health or water quality. Same kind of situation where almost 70% of those who apply were rejected. Last year, a little over 11,000 CSP contracts were awarded, or about $835 million. But at the same time, over 24,000 applicants were denied for CSP. So I'm going to just show you a little bit of a funding trend for these two programs over the course of the past 14 years or so. And some three key places in time are marked here. You can see back in 2014, with the enactment of the 2014 Farm Bill, the percentage of folks applying to CSP and getting those contracts, that goes way down. That was a Farm Bill that weakened CSP. It was a tough budget year. Congress looked a little bit different, and it was not as pro-CSP as we would have liked. And in that case, a lot of the CSP funding went over to EQIP, and you saw EQIP funding go up. And then again in 2018, you see a big dip in folks getting access to those programs. And toward the end, you see the IRA, or the Inflation Reduction Act. And that was the bill back in 2022 that invested $20 billion into conservation funding for CSP, EQIP, and a handful of other USDA conservation programs. And I'm really excited about that because that targeted the money to climate-focused practices, and we're hoping that it can help put a dent into what we call the closed-out crisis. We've had a whole year of IRA funds so far, and while more farmers have been able to access these programs, there are also more farmers lining up at the door of their local USDA offices to enroll in these programs. So we're just barely scratching the surface here. And I'll quickly show you some maps of what's going on here. This is a US map of EQIP applicants, the percentage of folks in each state that are accepted into the programs. On the low end, you have less than 20%, and on the high end, you have between 60 and 69%. So again, there's a lot of strength in the West, in the Northeast, but in a lot of the heartland of the country, there are a whole lot of farmers being closed out of this program. Same thing with CSP. You see in the heartland, kind of Mississippi River Basin, to the west and in the south, there are a lot of farmers who are being closed out of the Conservation Stewardship Program who could really use financial assistance to put conservation across their whole farm. So that was just a little bit of background of two specific conservation programs. There's a lot that's in the Farm Bill, but I just wanted to kind of highlight why it's important to me and the kind of the effects of what good Farm Bill funding can do for conservation in the United States. So as I mentioned earlier, we've seen some side by side, some section by sections from the Senate and the House, kind of laying out what they would do in a Farm Bill year, right? Farm Bill comes every 5 years. This is how we set ag policy in the United States. And there's some good stuff and there's some bad stuff in these proposals. We haven't seen full bill text yet, but we've seen a lot of pretty specific policy suggestions from both the Senate and the House. So I'm gonna start to get into the weeds a little bit, and I know that both Jesse and Kate will have a lot more to say about this, but I'm just gonna talk about some highlights. Kind of the main point that I want to talk about, and I know Jesse will talk about this more as well, is what happens to the funding from the Inflation Reduction Act. As I mentioned, there was about $20 billion dedicated to USDA conservation programs from the Inflation Reduction Act in 2022. And that funding, as written, expires in 2031. And what both the Senate and the House bill do is they take that funding and they incorporate it into the Farm Bill baseline, which means that funding is secure well past 2031. It's kind of the expectation for these programs that this is the baseline funding. We're going to have funding going into the future, which is really important in the face of climate change, right? It's not going to stop in 2031. We need to ensure that there's funding going forward. The difference, however, between the Senate and the House versions is that in the Senate version, that IRA funding stays with the programs that the IRA intended. That's EQIP, CSP, the Regional Conservation Partnership Program, and the Ag Conservation Easement Program, or ACEP. On the House side, and one other thing to mention is that the Senate bill keeps the climate focus on those funds, right? Where money from the IRA is only supposed to go to practices that USDA considers to be climate smart agriculture or forestry practices. Looking over at the House side, they do a similar thing as the Senate, where they incorporate the IRA funds into the baseline, but they take away those climate sideboards, right? So now any practice that is funded through those programs is eligible for this additional funding. It also takes some of that funding and puts it into the Conservation Reserve Program, which is kind of a land retirement program. It also puts it into forest easements and feral swine eradication program, among other programs. One other thing that IATP has been looking at for a while is the requirement that 50% of funds through EQIP go to livestock. While there are a lot of good conservation programs that are practices that are funded through the livestock set aside, there are also some practices that are maybe not as conservation focused, things like waste storage facilities, anaerobic digesters, things that aren't necessarily true conservation but are more structural in nature. A lot of the funding from that set aside ends up going to practices like that. And in the IRA, that requirement was taken out. So when incorporating these funds into the Farm Bill, that the removal of that requirement is still in place. Whereas on the House side, they reinstate the requirement that 50% of livestock funds of EQIP goes toward livestock. And another kind of angle on that requirement is that not all states are big livestock states. This is a nationwide requirement, but states are kind of expected to fulfill that. So if you're going to a state, let's say like New Hampshire, where not half of their ag landscape is livestock, and they're not able to meet that 50% requirement, that money goes back and can be sent to a state like Iowa, for example, which will definitely use that 50% livestock requirement and use those funds from a place like New Hampshire. Just going to stick with the Senate for a little bit. It does include some precision agriculture practices. It includes a new 10% set aside for small farms, which is something I'm really excited about, and I think can help connect more farmers to these conservation programs. We don't know for sure, which sizes of farms are being closed out, but looking at the size of contracts that are being awarded, we can say with a lot of certainty that a lot of small farmers are being closed out of conservation programs. So setting aside 10% of all funds for small farms, while we'd love to see that even higher, will go a long way to making sure smaller folks are able to access these funds. Another really exciting development is that the Senate bill lowers the adjusted gross income limit from $900,000 to $700,000. So now, if this version becomes law, if you make over $700,000 a year, you won't be eligible for a lot of these conservation payments, and more of the funding should theoretically be available for the smaller scale folks. The bill also puts in place a permanent disaster program instead of the ad hoc kind of piecemeal disaster programs that have existed so far. It adds climate change, adaptation, and mitigation as a purpose of EQIP, and a few other things. And then there, you can see on the other side, on the House, there was no mention of climate change in their section by section. And one more thing I want to raise: the minimum payment for the Conservation Stewardship Program was raised in both bills, $4,000 in the Senate and $2,500 in the House. And we think that's an exciting development. I think a lot of small scale folks want to access these programs, but feel that acre-based practices, things like that, when they do all the calculations, it might not add up for them on a really small scale. So these are exciting minimum payments that can help pencil it out for those folks. I'm not going to go through all of these. We'll send out the slides afterwards. I know my time is running out, and I want to make sure that you all have time with Jesse and Kate, but do want to flag one thing that will affect the politics of these bills is the nutrition provisions, right? About 80% of the Farm Bill is funding nutrition programs such as SNAP. This is what used to be referred to as food stamps. And that's kind of been this red line for a lot of Senate Democrats and House Democrats as well, is that they don't want to see cuts to nutrition programs and the House proposal does cut nutrition programs. There is a analysis that says their proposal might lead to the equivalent of about a 30% cut for SNAP going forward. So this is going to be the sticking point for the two houses. So it'll be interesting to see how or whether they can negotiate that out. That's something that we'll be tracking and making sure that the folks are aware of. And yeah, I will pass it back to Sophia and then to Jesse.
Thanks so much, Michael. That was great. And an important reminder that there's a whole context to the Farm Bill, of course, beyond the environment, which I'm sure we will hear more about. I'll turn to Jesse next. Jesse Womack is the Conservation Policy Specialist at NSAC, the National Sustainable Agriculture Coalition. In his role, Jesse leads the coalition's federal advocacy on key conservation programs administered by the U.S. Department of Agriculture. Besides his deep knowledge of the policy process in Washington, Jesse grew up working as a laborer on various farms, holds a BA in Environmental Studies from Gustavus Adolphus College, and a master's in Food and Ag Law and Policy from the Vermont Law School. Jesse developed programming for local food farms and businesses in southern Minnesota, led a 9-county agricultural resilience study while coordinating programming for the FEAST, a local foods network, and worked with the Nature Conservancy in Ohio to improve water quality and carbon outcomes by promoting conservation practices to farmers. Jesse, welcome.
Awesome. Thank you, Sophia. And thank you for that wonderful overview, Michael. I'm going to start off sort of digging into one of the big points you raised without slides. Sorry, guys, you're going to have to just look at me. The point I want to start on is sort of the importance of climate smart agriculture in this farm bill. As Michael highlighted, because of the funding provided by the Inflation Reduction Act and the explicit targeting to climate smart ag and forestry practices, what we do with that money next is really a central point of tension between the two chambers as we rewrite the Farm Bill and as we envision building increased funding for conservation programs into this Farm Bill. As Michael pointed out, the Senate keeps all of the existing money where it is, and the House, along with those climate sideboards, while the House strips the sideboards away and spreads the money around a little bit to a couple different programs. I think when considering like who's on the right path and where do we need to land ultimately, it's important to keep in mind really those demand figures Michael shared at the top of the presentation, right? CSP and EQIP have been wildly oversubscribed for a long time. It's not a new thing. And in fact, when the Inflation Reduction Act was first being imagined as, the Build Back Better package, we were talking as a community about doubling the size of the budget for those conservation programs in order to address this historic backlog of farmer applications. And ultimately, IRA did not accomplish that, right? We did not permanently double conservation funding for these crucial programs that help install practices on working farms. So while IRA was a massive victory, in a sense, it was also a half measure, and therefore further diluting that by spreading the money around to additional programs is probably not the right move at this point in history. We have sort of historic disinvestment in these programs to correct. We have ample evidence of sustained farmer demand. And so we really need to make sure that while we have the opportunity to build baseline and perhaps not double, but greatly increase the funding for EQIP, CSP, ASEP, and RCPP, that we take it. And that is, that's why the Senate bill is so exciting to us, is seeing that focused reinvestment in these programs that have needed it for so long. Additionally, thinking about that investment coming with permanent climate targeting inside conservation programs, having 1 year of IRA spending under or out into the world, we've seen some really promising numbers that make it seem like permanent climate targeting is probably a great idea. It's something NSAC has long been supportive of. But last year, looking at contracting data, we were able to see that IRA funds explicitly, separate from Farm Bill funding for these conservation programs, experienced almost the same level of oversubscription as the programs did at large. If you look at just the IRA funding pools inside EQIP and CSP, almost 50% of farmers were turned away from that dedicated fund or that dedicated pool of climate smart funding. So that should be indicative that farmers are willing and eager to adopt these practices. The demand for climate smart ag and forestry is almost as high as any and all other conservation practices, and Congress needs to respect that as they finalize this farm bill. And just as additional evidence of the size of that demand, it's also possible to look at contracts that were funded exclusively by the Farm Bill pool of funding for EQIP and CSP, so dollars that do not have to go to climate smart ag and forestry practices, but just go to whatever farmers are interested in. And last year, even in that Farm Bill pool of funding, we saw 38% of obligations go to climate smart ag and forestry practices. Again, showing that demand for this is so strong, it is outpacing the funding already made available by IRA, and we need to make this a permanent feature of conservation programs long-term if we're going to ensure, we deliver climate focused dollars to the farmers that are asking for it. So I think that's a really important, some really important data, brand new data to have top of mind as we're evaluating what each chamber is proposing we do with conservation investments going forward. And from there, I'll say, we're tracking other reforms that are happening inside each individual conservation program, sort of similar to what Michael was sharing on his slide, his last couple slides with all the bullets. In particular, NSAC is always, a stalwart champion of the conservation stewardship program in particular. We believe this is one of the best tools we have in the conservation tool belt. As Michael said, it's meant to tackle whole farm, holistic conservation planning. It's meant to help people think about holistic systems that improve, kind of every acre of their operation. It provides meaningful financial support to innovators and early adopters of conservation practices that have already solved big challenges on their property, but want to keep improving their conservation systems long-term. And we really want to ensure that the purpose and intent of that program is preserved, because we really believe that holistic approach to conservation delivers the greatest environmental benefits on the landscape. And so between the two chambers, we're seeing a couple proposals, some good in the Senate to strengthen climate targeting for practices funded through CSP. That's awesome. NSAC has been a huge champion of that. That raised minimum payment of $4,000 per year that Michael highlighted. It's also wonderful. NRCS has elected to start doing this themselves right now. This year, farmers can get a $4,000 minimum payment in CSP. And so codifying that and using the Senate position sort of permanently only makes sense to us. But I think there are a couple things that are somewhat concerning that maybe are not in keeping with the the broader purpose of CSP and the type of farmers it seeks to support. We've seen some outsized cost share pieces proposed for things like feed management or feed additives, as well as precision ag technology inside the CSP program, coming from both chambers. Again, since neither one of those solutions is necessarily a holistic whole farm intervention that would yield cascading environmental benefits, maybe not something that is deserving of the advanced cost share proposed at this juncture. Both things are worthwhile conservation practices that NRCS should continue to look into, and provide support for, but probably not on the order of magnitude of greater than 100%, as both chambers have put forward at this juncture. Similarly, sub-programs inside CSP that have been proposed that would sort of divide the purposes of the program, whether it's a one-time geographically specific initiative or a state soil health program slotted into CSP, with demand for the program as is being as high as Michael has clearly demonstrated for us. It really seems a little misguided to start sort of divvying up available funds for that program and directing it towards discrete purposes that are anything other than raw farmer demand to enter the CSP program, especially when we have evidence in other conservation programs of accomplishing these same goals, right? For geographic specific initiatives, EQIP has long been the place where those initiatives have lived. Landscaping initiatives are kind of a hallmark of the EQIP program. And a state soil health assistance program naturally mirrors more closely the regional conservation partnership program, which is structured only to stand up individual independent projects that NRCS provides funding and technical assistance to. Those aren't things that are hallmarks of CSP, and therefore, while both those ideas are somewhat valuable, maybe they aren't the most or the best fit for the CSP program. I think those are some of my really high level takes. I think there's also some really exciting CRP proposals inside the Senate bill that are worth keeping eyes on. Generally, increasing that acreage cap is positive. Raised rental rates for the continuous CRP signups, as well as the creation of an agroforestry pilot program. So folks that want to be experimenting with silvopasture have support for it in CRP and in other programs. The creation of a conservation easement program, so land that really maybe shouldn't be conservation reserve easement program, excuse me, that maybe shouldn't be in production or is chronically in and out of CRP, can have more of a permanent solution available to it. All positive step forwards, all things Izaak has been excited about and is excited to see start to move forward. I think there are a couple things that we're a little sad not to see either proposal tackle at this juncture. We're sort of always having conversations about how USDA can better serve BIPOC communities, historically underserved producers, beginning farmers and ranchers. And inside these conservation programs like CSP and EQIP in particular, we often see things like minimum program carve-outs. So a set number of dollars or a percentage of the program's total dollars need to go to these communities to ensure NRCS is doing the legwork of reaching out to folks, getting them enrolled, providing them with robust technical assistance. We were advocating for a pretty substantial increase in the beginning farmer rancher and socially disadvantaged producer set-asides inside both EQIP and CSP, and have not seen language to that effect in either bill at this point or in either side by side. So there is, hopefully there can be a path forward there, as making conservation programs more equitable is really important. Though I agree with Michael very much that a small farm set aside inside EQIP will probably also work towards this goal in a somewhat indirect way, and it's really positive to see that show up in the Senate proposal. I think I might be a hair over time or right near it, so I can pause there and take questions in the chat if that's appropriate, but otherwise I'll pass it back to you, Sophia.
Sounds good, Jesse. And I meant to say after Michael spoke, please do put your questions, and people have already started putting questions in the Q&A. And panelists, well, you have time if you want to take a look and see what's coming, and we'll save a few minutes at the end for some of the questions that we can get to. So that was great, Jesse, thank you. Turning to Kate now for our last intervention. Kate, There you are. Kay Hansen is the Agriculture Program Director at the Izaak Walton League of America. Her work is focused on conservation in the Farm Bill, programs in the U.S. Department of Agriculture, soil health, and water quality. She brings deep expertise in both conservation and crop insurance, and previously served as a policy associate at the Center for Rural Affairs. She lives in Ames, Iowa, and is originally from Northwest Indiana. Welcome, Kate.
Thanks so much, Sophia. This has been really excellent. And as I'm getting my slides set up, I just want to say and reiterate, this is hot off the press type updates. I don't even know if we've had a full work day between when we got that House framework and today right now. So really excellent job to Jesse and Michael for their quick work and a lot of hustle the past couple of days. For my time, I'm going to spend focused on conservation and crop insurance and where that intersection can be interesting to us in the Farm Bill. Crop insurance can be a really hefty topic, and so I'm going to try to keep those guardrails on, but if you have any other questions, feel free to throw them in the chat. So just to ground us, we know that crop insurance is really widely used in terms of acres and percentage of our country's ag land. So this graph is showing us that since 2000, our acres have increased. If we zoom into 2021, we're looking at about 444 million acres insured. And if we put that in the context of our total ag land, we know there's 880 million total acres of ag land in our country, 382 million of which are cropland. A smaller percentage of that, not by too much, but a smaller number is total harvested cropland. And so when I see that 444 million, that tells me that this is a significant share of our harvested cropland and some combination of livestock policies, pasture. There are a couple of crop insurance products that are emerging in that space as well. But when we drill down to the number of farms and ranches and how many of them are using crop insurance, we start to see a slightly different story. So the most recent census of ag, which was released earlier this year, tells us we've got 1.9 million farms and ranches in our country, but only 369,000 of them are enrolled in federal crop insurance. And so this is starting to tell us what a lot of us already know, which is that the resources of federal crop insurance, the products and the programs within federal crop insurance are mostly being directed to our commodity folks, and oftentimes those with medium or larger size operations. A little bit of data to support this comes from 2019, but the Congressional Research Service is on the record saying that more than 90% of planted acres for corn, beans, and cotton were insured in the federal crop insurance program, and more than 85% of wheat. So just to give you a sense of the types of operations that are taking up the lion's share of these programs. But again, this scale I think is really interesting, and 444 million acres surpasses the acres we can count as really meaningfully doing conservation, for example. So it is really intriguing to think about how can we think about conservation in the context of crop insurance. And part of my background before coming to the league was doing education with farmers on their crop insurance options. And so I was at events and working with them one-on-one. And it was not uncommon for folks to have questions like, hey, I'm thinking about this new conservation practice, but I don't want it to mess up my crop insurance. And that was a very real, or maybe at times a perceived barrier, that they did not want to impact their risk management strategies. And having conservation get in the way seemed to be a friction point. And part of that story is what we call good farming practices. So these are elements of the risk management agency's program, the risk management agency being the agency that administers federal crop insurance. And essentially, it's a set of guidelines that a producer needs to follow in order to remain in good standing for their crop insurance. And at face value, good farming practices make sense because RMA doesn't want somebody doing something totally wonky out there in the field and then expect to cut a check because it didn't work for them. But for a number of years, the real big issue here as it pertains to conservation is that conservation practices were not on the good farming practices list. So we have literally hundreds of practices, as Jesse and Michael have spoken about, that NRCS, an agency at USDA, is encouraging and supporting. And then another agency within the department is not actually listing those as practices you can do to stay in good standing with your crop insurance. So we had a breakthrough here in the 2018 Farm Bill when cover crops were added to the good farming practices list after a lot of advocacy from our community and others. And then we had an even more exciting development at the end of last year, and one that I don't think got enough attention. This was sort of near holiday time and maybe went under the radar a little more than it should have, but RMA announced that all NRCS supported practices would be good farming practices, which is really excellent. And so what we see when we look at the Senate and the House frameworks that they've released, in the Senate proposal, there's language that would align with this administrative change in the Farm Bill. And I think that would be a good decision here, just to get that really solid, that all of those NRCS practices are good farming practices. There are also some really interesting conversations about rewarding good practices like cover crops or other things that we know can help reduce risk in a discount type of way. You may have heard this called like a good driver discount, where a farmer would have a discount on their premium that they owe on their crop insurance. There are a number of states that have state level programs to the effect of $5 per acre. They're administered by the Department of Ag and RMA jointly. And they've been rolling for a number of years. We're really proud that Iowa was the first state to stand up a program like this, and there's been a number since. And for 2 years, we also had the pandemic cover crop program at the national level, which was funded by pandemic funds, and again, was just 2 years. But that type of concept has been out there for a while now. And so in the Senate framework, we see 2 encouraging elements pertaining to these discounts. One says that USDA should consider offering discounts for cover crops, crop rotations, and then precision irrigation or fertilization, essentially opening that conversation in an exciting way. And then there's another provision that would be a federal match for those state programs up to $5 per acre. In the first one, there's some language that says consider other practices and continue sort of annually talking with experts about what else could be added to that list. And then in the state one, there's also language about this could also include long-term soil fertility type practices. And the league is really supportive of that. We recognize that operations are diverse, and a sort of larger suite of soil health practices could be really excellent for a discount like this. There's also a provision on the books called sod saver, which is important to us. This was established in the 2014 Farm Bill. And basically it says, if you want to go out there and break some native sod and, tear it up and start farming it, you're not prohibited from doing that, but we're going to sort of not sweeten the deal quite as much on your crop insurance. We're going to reduce your premium subsidy by 50%, meaning that the farmer will be paying more for their crop insurance on those specific acres. And there's also a function of how the crop insurance coverage is calculated relating to their transitional yields. And it gets kind of wonky in the weeds there, but basically what that's saying is that the total yield that you expect, that's what you plug into your coverage, we're also going to temper that down to 65%, whether that's that farmer's past yield or a county transitional yield. So there's just a mechanism to say we don't want folks out there tilling up sod, and if they do, then they certainly are able to do that, but they're going to have these changes to their crop insurance on that ground. So sod saver is currently active or applies in 6 states in the prairie pothole region. I've got them listed there. And the Senate proposal has language that would make this a nationwide program. And CBO did a score of this a while back and estimated that this change would save $50 million over 10 years. So in the Farm Bill context, 50 million is not the most, but certainly we know that we are in a Farm Bill where money really matters in terms of what programs are getting what. And so this would be a savings of taxpayer dollars. And also want to flag one other provision in the Senate framework. There are some elements about research and development and encouraging RMA to keep innovating in terms of the practices they offer and the programs that they offer. And one of them on that list relates to policy for crops regularly using cover crops, which to me is just encouraging to see in that framework. Most of these examples I've had have related to the Senate side, just because there's a little bit more on that intersection of crop insurance and conservation to talk about. The House proposal, although it is more detailed, the one we got on Friday, it is still a little bit more brief. And it is more focused on program changes, but when I read it, there's less about conservation and crop insurance. So I look forward to seeing the full draft and kind of seeing how these two frameworks and proposals, relate with each other. And before I close, I want to make kind of a bigger picture pitch for our community, which is that we also need to be invested in expanding and improving access to crop insurance for different types of operations, different types of conservation management styles. And in the past, I've said, as policy professionals here, part of our job needs to be creating the systems that help farmers say yes to conservation. And on a number of things, I don't think we're there with crop insurance. And at its worst, I don't want it to be a friction point for somebody to say no to conservation. So one example that comes to mind for me is relay cropping. This is sort of a cutting edge conservation management style where you've got two crops out in the same field with different planting and harvesting times. This is a photo from a gentleman and his father who do some great work here in Iowa. And up until 2022, relay croppers did not have options to insure their crops. And it was either you go uninsured or you kind of wink at your crop insurance agent and say you're insuring your beans. So up until 22, that was the case. They did make a change and now there's a written agreement available for this practice to be covered. But still, that's not quite the type of product that one could access for other types of commodities. So I think we still have a way to go. Another example that comes to mind are small grains. Here in Iowa, corn and beans dominate our row crops, but it's really helpful if we're having conversations with farmers to talk about, could we diversify your rotation? Could we throw a small grain in there? We know there are water quality benefits, soil health benefits, even to a certain extent, wildlife benefits. But again, in my opinion, we have some progress on small grain coverage, but it's still not operating in the same way that some of our other crops are used to in crop insurance. So of the 38,000 acres of oats here in Iowa, just from 2022, about 11,000 of them are insured. And I think this is a complicated story because not every farmer needs to insure their small grains and they might have other reasons for that. But knowing that these are a lot of the same folks that are insuring their corn, their beans at 90+%, I want to make sure that we are thinking about how do we create these systems for everybody. The final example I have, this relates to those good farming practices again, but RMA directs cover crop users to terminate those cover crops by a certain date. And again, that is what their eligibility and their good standing for crop insurance is tied to. And so this is the current map that they use. This is a map that has been brought up to me for years from farmers and crop insurance agents. Is there a way we could revisit this? Maybe from an administrative lens, could we think about this map in a different way or change some of the metrics on there? Because as you'll see in zone 4, which is that blue zone, a farmer has to terminate their cover crop before their cash crop or their insured crop emerges. But if you're in yellow, zone 2, you have to do so 15 days before planting, except for summer fallow. So this is, I think, getting in the way of some innovation out there on the landscape and people trying new things. So kind of a combination of administrative changes and legislative farm bill changes, I think really can help us get folks to a better place of saying yes to conservation and reducing some of that friction. So with that, that's my email, and I'm happy to answer any questions in the chat as well.
That's terrific, Kate. Thank you. Thank you so much. And the chat is busy and the answers are busy. And I did get a question about whether everyone is seeing answers to the Q&A. If you're not seeing the answers, let us know. But I think the chats go to one place. Q&A should be going to everyone. And so continue to put questions in the Q&A as you need to. What I would like to do is just group a few things. And maybe because there have been some specific questions and specific answers already given. And Jesse, I'm going to get you to come back on camera. I just wanted to kind of group things a little bit. There's, I think, questions about how we stop the harm. So it's all very well having conservation, but if at the same time we're putting a lot of money into destructive practice, that doesn't help. So just, I think the crop insurance, Kate was just getting to quite a few of those points. And the question about ethanol, I think the connections to climate energy policy have also had some sort of troubling implications for what agriculture can do. Links to both ethanol is one, there's also biogas. And then a second set of questions around how we are funding the adaptive capacity, the technical assistance, the bridging. You need some certainty with your money. A year's money isn't going to persuade many farmers to take on a big risk. So thinking about how we keep building adaptive capacity, because we don't know what the next climate problem could be. And I would like to think about tying that to nutrition. Like, how could we have better nutrition with more resilient ag? Because of course, all of that spending is going to a lot of food that is not great, but that's probably outside today's thing. And then third, there was a bit of a how. There was a specific question, like, where should we lobby right now? Where is it? Is it the House? Is it the Senate? Where are things going? And Michael started to answer that. You might want to say a bit more. I'm sure Jesse has thoughts on that. Sitting in DC. I think you're sitting in DC. Anyway, sitting in a DC-based organization. So I don't know if you all, I don't know if you've had a chance. Michael, I might start with you because you've had a look at those questions. But if there's anything further you want to say about one or more of those dimensions of this, stopping harm, building adaptive capacity, and how we get there, like right now in the next few months, what's one thing people should do?
Yeah, I mean, I think the thing I'd like to see conservation programs focus on is building resilience and building, the adaptive capacity of farmers, right? So that as we see more droughts, as we see more floods, that, the way their farm is set up, it's better able to deal with that. And that also includes, helping folks diversify their operations, right? Where you're not penalized for growing wheat one year because, hey, this is my crop insurance for drought, essentially, when it might be a bad year for corn and soybeans, things like that. So I think, I'm not going to go too much deeper into that, but I do think that should be the focus of our conservation programs instead of, well, the environmental disasters are going to happen. We need to use this money to kind of almost clean up bad actors rather than fund the good actors. And hand it to Jesse.
Yeah, thanks, Michael. And I was gonna hop in with a couple small policy solutions that are actually in the Senate proposal that I think sort of get to this. Like, they're small, but they do. If we're thinking about what it takes any farmer to do in terms of transition from one system to another, like, the big thing is time and persistence, right? Like, you need the opportunity to iterate, you need the opportunity to make mistakes and have it not cost you your business, and dial in something new that is ultimately profitable for you. And so I think there is going to be increasing conversation in our community about how do we build better on-ramps between programs so folks that get started somewhere can get into another pot of funding somewhere else and help them keep building. And one example of that is proposed in the Senate is like early termination of EQIP conservation incentive contracts if folks are trying to enroll in the CSP program. So that means you can get involved in, say, building out a slightly more robust cover crop program in EQIP on a 3-year contract. And if you get halfway through year 3 and you're like, I just want to do so much more, you can enroll in CSP and keep working for an additional 5 years. And 8 years worth of federal support to keep building up your practices over time. That is a pretty substantial bit of the time gap to cover between like first adoption and mature conservation system. So I think that's really, really positive. And I was going to offer one thought on stopping the harm. This is something we did not see in either proposal, but we know that, you know, there's kind of a lot of power in the conservation compliance requirements in these programs. So whether it's a national sod saver or swamp buster saying you can't be plowing up wetlands, or the highly erodible land provisions saying you have to have a conservation plan for vulnerable soil types on steep grades. Those provisions apply to folks that want to use conservation programs, commodity support programs, or crop insurance programs. And that's a lot of acreage in the country, a lot. And if we say created a new requirement that all crop ground participating in all of those programs had to have a soil health plan in place for all their actively managed property, such that no erosion occurs, that's stopping the harm. You know, that's saying if you want to continue to receive federal benefits, you do have to stop the harm. And it's still voluntary. That's still something farmers would elect to be a part of. And it's something we proposed via the Agricultural Resilience Act this Farm Bill cycle. So yeah, that's definitely something we're viewing as a loss right now, that idea didn't get more traction, because we have the policy tools to stop the harm. We need the political will.
I'm gonna give the last few moments to Kate. Yeah.
Yeah, I agree with what's been said. And I think especially on the crop insurance front, we have a pace issue, because we know that we need change quickly, and there are farmers trying really innovative and interesting things out there on the landscape. And RMA is invested in being actuarially sound and just having data on data to confirm their coverage levels and how their programs operate. And so there's this tension, particularly in crop insurance, of how quickly can we get programs and addendums and enhancements and all those things up to speed where people need them at the pace that works within that system. So on the crop insurance side, the pace is a real challenge at times.
Thank you, Kate. I think given the time, there's a lot of very specific questions, but what I would suggest is that I'm going to say thank you all for coming. I'm going to say you have contact information for people. Please reach out. I think everyone here on the panel is willing to answer more specific questions, and we've captured those questions. So we did answer a number as we went, but we can continue to do that. A lot of these questions on bridging, for example, and on how to encourage the transition to the ag that we want. And we'll get the recording out by email to all of you who registered within the week. Someone was asking how many were here, and I think we hit 90 something. Anyway, that number of participants, it was a great turnout. So thank you so much. And thank you especially to the panelists for giving us your time. And we'll continue to watch the hot off the press changes, and yeah, we'll be in touch.